Don't be duped by doomsayers. JPMorgan says the S&P will rebound to 4,900. And here are three stocks it's using to bet on a bounce. So I'm not going to share this whole article with you guys. I will have a link to it down below in the description area if you do want to check it out. But I did want to draw your attention to just this opening paragraph as we jump in our weekly growth portfolio update. Looking at the S&P 500 right now, you might be convinced the stock market is destined for doom in 2022. The benchmark index rose nearly 27% last year. This year, it's already down 22%. Plenty of stocks are deep into correction territory. So keep that in mind. It's not just our growth portfolio here. There are plenty of stocks, pretty much every stock out there that's in correction territory. Yet, JP Morgan's global head of equity macro research sees a major rebound on the horizon. People are basically positioned for a recession. Our base case is that this is not going to be a recession in the next 12 months. And we think that from that angle, the portfolios are wrong-footed. He reiterated a year-end price target of 4,900 for the S&P 500. Since the index sits at 3,736 today, his target implies a potential upside of around 31%. So your portfolio might not be doing so hot this year, and maybe you are freaking out, you're scared, you're worried because you're hearing recession this, recession that, bear market, Kramer saying to sell. You getting worried now. People are starting to worry a little bit, right? But you got to understand this is part of the cycle. It's part of the process, right? The stock market can't only always go up. It needs to come down. It needs to correct itself at times, and that's what we're currently experiencing. So when we jump over here and look at our portfolio, you can see our growth portfolio over the past day, we do got some green, is up 6%, which is pretty good. That is really good. That is a good indication that maybe we might have seen the bottom potentially. However, the past week suggests, oh no. As you can see, we're down 4.49%. The past month, we're down 7.33%. The past quarter, we are down 40.51%. In 1 year, which is the same as all time, we're down 62.84%. Ooh, brutal. But hey, we are not selling. We're sticking to our plan. We're sticking to our guns because, as I just mentioned, the market might be running from the rest of this year in order for the S&P 500 to reach those marks, that target point that analysts are predicting. So to me, that is a good indication that, okay, maybe we saw the bottom for this this bear market that we're currently in. Now, I personally believe, the market's probably going to continue to be a little bad for the rest of this month, but I think come July and August, I think things will start to pick up and will make progress towards those numbers that the analysts were predicting for the S&P 500 and whatnot. So I think things are going to end on a good note, as that article suggests. But right now, I think we still might have a little more red in the very near future. Either way, we're not changing our plan. Our strategy is still the same, continuing to invest $25 every week. And if anything, I might want to up the ante a bit, where we start to invest $50 every week for the time being, while the market is currently in this, this bear market that's down and potentially could go lower, but prices are really cheap across the board. So this is the time you want to capitalize and grab as many of those cheap stocks as you can. So looking at our portfolio, you can see the only green we have in here is ChargePoint, who is up 3.72%. After that, this is just like a massacre over here. SEMrush is down 23.84%. Nvidia, is down 36.73%. CleanSpark is down 52.07%. Palantir down 63.89%. DraftKings down 66.31%. Backed Holdings down 72.04%. And Coinbase, down 90.92%. Man, this is so tough and so brutal. I mean, if you are new to investing and you have a portfolio like this, I can understand why you would be thinking, hey, I don't want to lose any more of my money. I'm going to sell and I'm going to walk away with what I got. I get it. But when you are so far down, at some point, most stocks get to a place where they can't go much lower. And a lot of our stocks are at that point. So, I mean, like I said, if anything, I might start to double down, and instead of doing $25 a week, we might start investing $50 a week for the short term while the market is as bad as it is, because when it's that bad, that means prices are really cheap, which is a good thing. So I don't know why we say it's bad, but that is more of a reason again to buy more stocks if you truly believe in the stocks that you have in your portfolio. Now, I don't expect backed holdings and Coinbase, DraftKings to just pop up and be in the green in another month or 2 months from now. They could be. No one knows, but I don't really expect that. And in my mind, my thought process with this portfolio is that this is money that I won't be touching for a few years. So if I need to continue to invest in all of these stocks for a few more years before they pick up and get back in a profitable position, that's fine with me. And if anything, like I always say, look at it, like a sale, a great opportunity to get access to stocks that you want at a cheaper, reduced rate. Why would you ever pass up on a sale when you want something? You want it. That's when you're going to try to double down, make sure you have the money so that you can buy more or buy whatever it is during that sale. And that's exactly what we're doing with our portfolio here in M1 Finance with this current market. I'm not worried. Some people are saying, oh, recession this, recession that, bear market this. And others, as I just mentioned at the top of this video, are suggesting that, hey, the market actually, the S&P 500 and whatnot is going to be up by the end of the year compared to where we are today. So that's very positive and more fuel for the fire and confirmation that, our dollar cost averaging strategy, where we're continuing to invest the same amount of money every week, regardless of how good or bad the market's doing, is a good move, because we don't know when the bottom is going to be here. So don't try to time it. As many have said, it's all about the time in the market, not timing the market. You got it? All right. So if you haven't started to invest with M1 Finance, you can use my referral link down below. Make sure, you fund your account. And if you do, I think all you need is $100. Then they'll give you free money that you can actually then fund your account with, or you can take it out and go ball in and splurge, whatever you want to do. But hey, get your money to work for you. And one way to do it is by investing. So, of course, this isn't legal or financial advice, just, another YouTuber, another brother out here trying to share with you guys, some of the moves that I'm doing to help me with growing my money, especially when we're in a very bad bear market like we have now. So if you're new to investing, don't panic, sell, don't freak out. If you don't believe in the stocks you have in your portfolio, okay, I get it. But if you do, if you think they'll be in a better place in a few years from now, I wouldn't sell, and I would try to stay true, try to stay strong, and stick with my plan, stick with my guns. And like I said, if anything, I might be doubling down over the next week or two. So definitely hit that subscribe button if you want to stay up to date on all of our latest videos, and hit that like button, that thumbs up. It does help with the YouTube algorithm, and it also lets me know that you guys enjoy and appreciate this video content. But all right, my friends, enough from me. You already know what it is. I gotta keep it moving, but I'll see you in the next video. Peace.